Welcome to another episode of Decode with Mithun, Stock Market Analysis.
Picture this. Friday, July 18th turned into a market thriller. The Nifty took a tumble in the morning, Bank Nifty wobbled in the afternoon, but by closing time it all came together, just enough to leave traders wondering, was that a correction or a setup for next week's breakout? Stick with us, because today's story has more layers than a good thriller. Absolutely. The early dip had many biting their nails, but by the end of the session, DIIs had swooped in like firefighters and propped things up. But was it enough to shift the mood? We'll unpack every moment, every flow, starting now. On Friday, the Nifty opened just below the 25,000 mark, slid to approximately 24,982 in early trade, but then rebounded to close at 24,968.4, down rupees 143, or about 0.57%. Bank Nifty echoed that pattern, ending near 56,283, down roughly 0.8%. Foreign institutional investors sold about rupees 375 crore, while domestic institutional investors bought in with around rupees 2,100 crore. That tug-of-war between global caution and local conviction set the tone. The session began with pressure from global tech weakness and softer U.S. futures, hitting banks hardest. But as DIIs began accumulating in pharma, agrochem, and select mid-caps, sentiment shifted. Technically, the Nifty found support around its 20-day simple moving average near 24,900 and bounced. Volume on that rebound suggested genuine interest, not just short covering. Bank Nifty showed similar behavior, but it closed the gap cautiously, hinting at lingering caution in financials. Financial and banking names took early hits on profit booking and macro jitters, while pharma and agrochem acted as defensive pillars. Mid-caps consolidated, building a base that could explode once global cues firm up. Intraday, volume hugging the upper side of VW app on the rebound pointed to accumulation, perhaps a sign bulls are creeping back in. Now our top stock picks. NACL Industries Limited emerged as the star among agrochem plays. It closed around rupees 302, up nearly 5%, and broke above a short consolidation range. With strong RSI momentum and rising volumes, the chart supports a potential move toward rupees 320 over the next 10 days, with a safety net around rupees 290. Prudent Corporate Advisory Services Limited drew attention with a block deal and institutional buying. It settled just above its 50-day moving average, hinting at a rebound if the buzz continues and volumes hold up. Sharda Cropchem Limited stayed perched above its 20-day EMA. With stability in global agro prices and steady domestic demand, this one seems poised to grind higher. Watch for a move above recent highs in the next few sessions. Shree Vasu Logistics Limited made quiet gains after corporate action. Holding above its recent 20-day average and carving steady gains day by day, it could gather momentum if volumes stay supportive in the next 10 days. Gujarat Apollo Industries Limited caught our eye after promoter buying. The ascending triangle setup on the chart is classic. Clear breakout above its recent highs could spark a strong move. Ashapura Minechem Limited showed base building near its 200-day average. That steady volume there suggests stability. A clean break above recent peak levels would mark it as a breakout candidate. Jindal Photo Limited bounced post-earnings and closed near upper Bollinger Band territory. With MACD signaling momentum, a 10-day move higher seems in range, provided ATR-based stops are used. Kaya Limited demonstrated renewed interest in the beauty care space. MACD just turned positive, and volumes are picking up. For a 10-day trade, this one is attractive but needs tight stop-loss discipline. KRBL Limited, the rice exporter, traded cautiously near support. It could bounce if the rupee stabilizes, though risk persists if Forex becomes volatile. Wait for confirmation before positioning. Our beloved stock, Trent Limited, our headline retail play, closed around rupees 5,375, sliding about rupees 42. That places it near its 20-day averages, which range between rupees 5,300 and rupees 5,370. Momentum indicators are neutral, leaning slightly negative. Nothing dramatic, more like coiling than charging. A hold near that average zone and a bounce toward rupees 5,450 could set the stage for a gradual move. If it dips below rupees 5,350, expect more sideways action. For a 10-day time frame, a measured entry near average with a tight stop could prove worthwhile, provided fresh retail or institutional cues emerge. Technical and fundamental insight. Each key stock respected its moving averages on dips, often supported by rising volume near breakout levels. Bollinger Bands compressed across mid-caps, signaling imminent moves in either direction. ATR and ADX reveal moderate volatility, ideal environment for disciplined traders. On the F&O front, Bank Nifty max pain levels are centered around the current quote. With the Greeks suggesting ATM and near ATM options, we'll see meaningful theta decay. Institutions continue to invest in defensive themes: pharma, agrochem, consumer. But prior to next week's heavy Q1 earnings releases, caution remains. Global context. Overnight U.S. futures were mixed. Europe eked out modest gains. Asia traded in a tight range. China tech lagged amid profit-taking. So India may open flat to slightly positive Monday, with intraday swings likely influenced by Q1 earnings reactions and foreign shifts. Overall, the global tone is cautiously supportive. DIIs have been consistent buyers across defensive and mid-cap spaces for 7 sessions now. Promoters stepping in, particularly in Gujarat Apollo and Prudent, signal internal belief. FIIs held back on Friday, reflecting global uncertainty rather than India-specific concerns. Their next move could determine the next leg of the rally. One seasoned chart watcher notes that volume confirmed holds above key averages often signal genuine interest, not just mechanical rebound. Another cautions that during high volatility earnings weeks, clones of VWF and ATR present disciplined entry points and discourage chasing breakouts without confirming volume participation. What's ahead? Expect Nifty to hover around 24,950 at the open. If it holds above the 20-day average and global cues remain calm, we could test or cross the 25,000 mark midweek. Bank Nifty will likely find support near 56,000, with possible bounce toward 56,500. Key themes to track: agrochemicals, pharma, mid-cap infra, and consumer plays. Also watch Bank Nifty option strikes around 56,000. They could trigger intraday momentum. Tomorrow, we'll unpack strategic options plays for Nifty and Bank Nifty, dive deep into the Greeks, and revisit Trent, NACL, and our surprise breakout candidate. No mistakes this time, promise. Friday gave us drama, discipline, and real data. Remember your levels, follow the flows, and approach next week with curiosity. Thanks for spending your evening with us. Stay sharp, stay kind, and we'll bring more insight, empathy, and perfectly brewed analysis Monday morning. Until then, enjoy your weekend and protect that chai. Important disclaimer: this commentary is for educational and informational purposes and is not financial advice. You must check with your SEBI-registered financial advisor before any investment. Anybody associated with this channel would not be responsible for any of your loss or even profit basis the content of any information on this channel. These videos are only for purely educational purposes and nothing else. Yes, of course, and do not miss to subscribe to this channel if you like it, though there is no hurry and you may do it whenever you have time. Before we close down, can we discuss a bit more on Trent, as I love this stock somehow? Yes, of course, I too love it. So let's take a closer look at Trent. This stock has been nothing short of fascinating in the last few months. It started the spring at rupees 5,106 on the 5th of March, climbed to rupees 5,260 by the 18th of March, inched higher to rupees 5,321 on the 26th, and then made a sharp rally to rupees 5,814 by early June. Right, and by late June, it didn't stop there. By the 23rd of June, it was at rupees 6,120, and just over a week later, on the 2nd of July, it even touched rupees 6,222 before sliding back to close Friday at rupees 5,375. So where does that leave us now, heading into the week of July 21st? Let's lay out what we see on the charts. Right now, Trent is sitting just above a crucial support band near rupees 5,350. That's very close to its 20-day exponential moving average, which suggests this is an area buyers have historically defended. And technically, momentum has cooled. RSI has slipped to the mid-30s, which suggests the stock is approaching oversold territory, but hasn't quite reversed yet. MACD for now remains negative, but it's flattening, which, in plain English, means selling pressure is weakening. We're also seeing volume dry up a bit as it consolidated around the current level last week, which often precedes a bigger move. Resistance in the near term sits up around rupees 5,600, which aligns with both its short-term highs and the upper Bollinger Band. So if Trent can hold above rupees 5,350 and attract volume early next week, we could see a bounce toward that rupees 5,600 zone. Exactly. If, however, it slips below that support band, say under rupees 5,300, we might be looking at a deeper test, possibly toward rupees 5,100. But that scenario seems less likely if institutions continue to accumulate. So our take for the week of July 21st through 25th? Trent is coiling, and if it holds support with even modest buying volumes, we'd expect it to climb back toward rupees 5,500 to 5,600. Traders should watch the 5,350 support level closely. A breach there would mean time to be cautious. And that, folks, is the beauty of Trent. Poised between disciplined support and patient buyers, it just needs a spark. Whether it gets that spark next week will depend on volumes, sentiment, and whether those technical indicators can flip back into the green. Somehow I feel that this week it would retest rupees 5,460 again. I too hope so. Let's see how it moves in the coming session. Till then, let's keep a watch. Yes, and stay tuned to us for another interesting episode at Decode with Nitin, Stock Analysis. Till then, spread knowledge, spread happiness.